Hello guys, welcome to our lesson number 9 on our series of Introduction to Financial Accounting. Today we're going to look at the General Ledger. As usual, you are with me, Goodson Sichari. Stay tuned for more. So today we're going to talk about the General Ledger. We've talked about journal interest and double interest. Now ledger is simply another name for account. So the general ledger is the general account. The general account. So a general ledger is a central, comprehensive record of all the financial transaction within an organization organized by accounts. So after we have entered all the transactions using the double interest system, now we post all the transaction to the general ledger for that particular reporting period. It can be a month or a year, so it serves as the foundation for preparing key financial statements like balance sheet, income statement, and cash flow statement. All these financial statements obtain their values and information from the general ledger. Okay, so what are the key components of the general ledger? So transactions are initially recorded in a chronological order called a journal, as we looked at in the previous lesson, and then they are posted to individual accounts in the general ledger using the double entry book system. Okay, so this ensures that every transaction has equal debit and credit interest, keeping the fundamental accounting equation that we looked at in lesson number 3 is always in balance. So now as we go on, let's look at the key components of the general ledger. So the general ledger is typically organized using what is known as a chart of accounts, which is a standardized list of unique codes for different types of accounts, which generally fall into main 5 categories as we already looked at. We have assets, which are the resources owned by the business. For example, we talk of cash, accounts receivables, and equipment. We also have liabilities, which are simply the obligations a business owes to its external parties. Talk of accounts payables and loans. And we have equity, which is owners or shareholders' interest in the business. We also have revenue, which is income earned from core business operations. For example, we talk of sales or service fees, depending on the core business of your entity. Also have expenses, which are simply costs that we incur to generate that particular revenue. Talk of salaries, rentals, utility expenses, and so on and so forth. So these are the key components that you are going to find in the general ledger. They are simply the accounts falling under each of these categories. So at the end of the accounting period, a trial balance is prepared to verify that the total debits equals the total credits, confirming the general ledger's accuracy before the financial statements can be prepared. So in our next lesson, we are going to look at how we do prepare the trial balance and financial statements. All those now come from the general ledger. So we're going to look at an example of one account here, how it is recorded in the general ledger. So the general ledger, from what we have discussed so far, you will reduce that the general ledger is simply an amalgamation. It's the central port. It's where all the transactions now will fall after posting in our transactions. So a typical financial accounting general ledger example involves recording transactions such as a cash sale. So you debit cash, credit sales revenue or paying rent, and so on and so forth. So we showing how each entry increases one account, which is a debit, and decreases another account, a credit, to maintain accounting equation with separate ledger pages for each account. Stock of cash, accounts receivable, accounts payable, revenue, etc., which are all used to track the balances. So we're going to look at the example. But before we do that, let's look at what are contained. What are the main features of a general ledger entry? So one of the most important is the account title and number. So this identifies the specific asset, liability, equity, revenue, or expense account. For example, if you want to record an expense account of rent, so the title we're looking for is a rent expense. That's the title. It has to appear that this is a rent expense account, or this is a cash account, or this is a bank account. If it's a liability, it's accounts payable account. So we must have that account title and name. Depending on the system that you're using in your entity, it might also have, each account might also have its own number. And date is also a very important feature of a feature that you expect to find in the general ledger. So when a transaction occurs, it is important to note the date on which the transaction occurred. Description, a brief explanation of the transaction. Okay, if you're saying rent, is it rent that you're paying, or is it rent received? So we have to write a brief description of each account. So we also need to show whether an account is a credit or a debit. So the left side, as we have already demonstrated in our previous lesson, left side is a debit side, increases assets and or expenses. The same left side, which is the debit, it also decreases liabilities, equity, and revenue. We are simply relieving the debit credit rules that we already looked at. Okay, and then we have credit side, which is the right side always. So this increases assets or expenses, while on the other side it increases liabilities, equity, or revenue. And then we have the running balance now. So this is simply the running total after each entry in separate debit or credit columns. So these are the main features of an effective general ledger. Common examples. Let's look at some of the examples. So we have a cash sale here. Transaction is we sold goods worth 1,000 for cash. So the entry will be, we're going to debit cash because we've received cash, and we're going to credit sales revenue count. Increase in cash and increase in sales. They are on the opposite entries due to the rules that we already looked at. Another transaction, we're saying we're paying rent. So we paid 2,500 for monthly rentals. So this transaction affects two accounts. The cash account, which decreases, therefore it will be a credit to the asset account of cash, and the rental expense of 2,500 will be debited because there's an increase in the expense account. And then supposing we also have a credit sale, so we bill the client $8,000 for service on credit. So this transaction will affect two accounts, the revenue account. So an increase in the revenue account is a credit entry. So we're going to credit the service revenue and debit our asset of accounts receivable with the same amount. Now, supposing we are receiving a payment for the credit sales that we made. So we received 2,000 from a customer for service previously billed. So this transaction is going to affect two accounts: the asset account of cash, which will increase, therefore going to debit it, and the credit goes to the accounts receivable account. Okay, so this is how now we're going to record all these transactions for the period in our general ledger. So supposing at the beginning we had an opening balance of cash of 80,000. Then we have on 9th January a cash payment from customer 6,000. So you will see that that cash payment is a debit entry and it is increasing the running balance. And then we have on 15th January paid for office supplies. So a debit will go to the expense account. Now, but this is just a cash account. That's why we only are now describing what goes in this particular account under the general ledger. At the end of the day, we have now the closing balance for the cash account, which will then now go to the trial balance ready to be transferred to the financial statement that we want to prepare. Okay, so that is how it's just a sample. I'm trying to be as brief as possible due to time limit factor. So this is just a theoretical explanation. Chance given in our next lessons, we'll try to do some practical examples as much as possible. Having looked at what the general ledger is all about, now let's look at why is the general ledger important in financial accounting. So the general ledger provides a clear audit trail, and it is very crucial for many reasons, one of which is it helps in accurate record keeping. So the general ledger offers a transparent and systematic record of all financial activities. As we saw in the previous demonstration, it shows all the financial activities for that particular account in that particular reporting period. So it helps in keeping the audit trail. It also helps in decision making. Managers use detailed data to analyze performance, spot trends, budget effectively, and informed strategic business decisions. So with general ledger providing all that chronological series of events of transactions, managers will be able to make rational decisions about their business. Besides that, it also helps in compliance. So it helps businesses to adhere to accounting standards and regulatory requirements, which is vital for internal and external audits and tax reporting. As we looked at, the general ledger ensures that the accounting equation always in balance. Therefore, it helps with the compliance with international accounting standards and financial reporting standards. You can add and more based on what you have seen the general ledger is all about. So in short, that is all I had for you under this lesson on general ledger. Thank you for watching. So I implore you to check out for our next lesson on the trial balance. We're going to look at how the trial balance is prepared and what it is all about and how we can derive various financial statements from the trial balance. If you have not understood, you can always play back the video. If you have any questions, put them in the comment section. Thank you and goodbye.